Welcome everybody to Fast CPA and Consultants. A warm welcome to our CPA, Fulton Abraham Sanchez. Good evening, Fulton. Welcome back.
Thank you, Monica. Hi.
Hi. So we are excited to start our third and last chapter about letters from the IRS in our Tax Talk video series. So thank you for sending your questions and comments. As you know, your doubts are the reason of our Tax Talk series. Well, Fulton, are we ready to start chapter 3?
Yes.
Okay, perfect. The first letter we are talking about today is CP22A, Notice of Change to your Tax Return.
Okay. This third group of letters are not that hot and not that red, except for one or two that I'll talk about in that moment. But CP22A, and remember, where do you find this code? You can find this code, this letter codes at the beginning of the letter in the right, in the top right. Then you find the letter code CP22A. You'll find the year this is for. You will also find your social security number, perhaps last 4 digits, a telephone number, and the person to whom you should talk. But specifically, CP22A is just a notice to changes in your tax return. Changes in your tax return might cause, or as a consequence of the changes, you will have an amount due, but that will be in a different letter. That will be in perhaps letter CP14, first notice of a balance due, or in a different letter where the IRS is telling you that you owe some money. So in this case, CP22A, notice of changes to your tax return, is not that hot. It's not something that you purposely committed. It is changes in your tax return, and because of the changes of the information that you provided to the IRS, when that information was compared to the IRS records, the numbers didn't match. And therefore, there are changes in your tax return. And because of those changes, you might owe money, but that will be, but once this calculation is given to you, the IRS will let you know if there is any amount owed. What is the objective of the letter? It is for you to present any discharge. For example, and I sent this in other videos. There is a 1099 form that you didn't receive timely, and you forgot to include it in your tax return, and now the IRS received this 1099 and you owe more money. You should not pay whatever the IRS is asking, because a 1099 is a gross income. You need to reduce that gross income for expenses that you will have that were caused by when producing that income. So you have deduction, you have expenses, and when you apply those expenses to that 1099, the amount of the profit will be lower, and the amount of the taxes will be lower as well. So even though you receive a notice of change to your tax return, and this is for a 1099, this is for a distribution, so a 401k, the distribution of a MIRA income that you receive and it was not reported originally, you should not agree with the amounts that the IRS is showing. You will be better off talking to a professional, a CPA, an enrolled agent, or a tax attorney who are versed or are experienced in solving an IRS tax resolution. And with that, you will be the professional will be addressing that to the IRS, or at least talk to the professional and ask for the opinion, and with that you proceed. But at this point, it's only an informational letter. Just think of the consequences that it might have. Whenever there's a change of your tax return, it might have a debt. Other possible changes without any amount owed. It could be changes in the status. Could be changes. For example, if you have an agreement with your your former partner, your ex-spouse, that 1 year you claim your tip and then the other year he or she claims it, it might be that the two of you claim it at the same year. So one of you needs to change that, and one of you will be paying some taxes or giving back some refund that the taxpayer received because of that claim. So this is not something to get stressed out, but it's something that you need to pay attention to and do something.
That's clear. And what about letter CP3219A and Form 5564 IRS Notice of Deficiency?
CP3219 and Form 5564. This is a notice of deficiency. It means that you pay short your taxes, and therefore, because you paid your taxes short, you need to pay the difference. At this point, you are able to apply for an installment agreement, or to apply. It will only be an installment agreement because it's a deficiency. It's not something that let's say that you didn't pay. It's something that it was a deficiency, meaning that you didn't report the income, or you misreport the income, and the IRS receive notice that you have more income. At this point, there is a deficiency in your tax return and the reporting of the taxes of the income, and therefore more taxes are created, and you need to address that. The IRS is notifying you for you to do something, saying if this is correct, this is not correct, I am not supposed to receive that 1099. You will need to talk to the supplier, to the vendor who provided that 1099. I've seen cases, for example, when there's a 1099 for one client that was not supposed to receive, and then the person or the company who issued the tax return will issue a negative 1099 for the same individual. So that will compensate the original 1099 with the income. And that will fix the problem, if that is true. Remember that the IRS can go and audit the company whenever there is a 1099. It's what's called accounting 1099, meaning the income on the 1099 negative income will counter the one on the positive 1099. But I've seen those cases one time when one taxpayer was claiming that the 1099 was not hers. There's a solution for that, but the company who issued the 1099 must be willing to issue a negative 1099 to compensate the one that issued originally.
I see. And what about the letter, which sounds really complicated, CP508c, possible revocation or denial of passport?
Yeah, I have talked about this letter in other videos, CP508c. This is when you owe more than $50,000 and you have no installment agreement, you have not paid your debts. This is personal debt or company debt, or even payroll tax debt. Whenever you have that, the IRS is going to deny your passport. Meaning that whenever you apply for a renewal of your passport, it will not be given because the IRS will notify the Department of State for not to issue a passport to your name. Or if you don't have a passport, the IRS will notify the Department of State not to issue a passport to you. So there, if you are, for example, if you are broke, if you have no money, you're not supposed to travel. So why are you going to apply for a passport? Yeah, that's kind of common sense. So if you are in a 10-year frozen period for economic calamity, let's call doubtful collection, and you want to apply for a passport, they're going to immediately deny it because you have no money to travel. You have no money going to pay rent or buy groceries. So excuse me. So it's not going to fly. The IRS is going to deny. In other words, if you owe more than $50,000, you are barred from applying to a passport. If you are in economic calamity, you are barred from applying to a passport. If you are an offering compromise and you want to apply for a passport during the period of the offering compromise, be very careful, because the IRS will receive a notice and then it's going to come after you because you have lied on your offering compromise application for paying a portion of the debt. So be very careful when you have this debt and whatever you are going to do in terms of traveling.
Okay, that's clear. And what about letter CP2000, Notice of Underreported Income?
This is when, remember that these letters, CP2000, Notice of Underreported Income, all these letters, these specific letters do not have someone typing the letter. This is an automatic letter that happens when the records of the IRS are compared to the records of your tax return, and they come a comparison, and then it's when the records of the IRS shows more income, the records show more income than your tax return. When this comparison happens, and if your tax return shows more income than the IRS is not gonna do anything. They're not gonna say anything. Say, hey, taxpayer, you are over-reporting your income. You should report. No, they're gonna get your taxes. They're not gonna say anything. The problem is when the income that you report is lower than the income that the IRS shows on the records. At that point, there is an automatic letter. No one reads this letter. No one writes them. It's automatically issued, and this is because a underreported income, and they will give you the details. The details are there. They will give you the details showing why your income was misreported or underreported. They will give you the name of the company or the name of the vendor, in the case the supplier, the company that reported a 1099 or reported more income to you, and even the calculation of the additional income will be there. I'm sorry, the additional taxes will be there. So make sure that when you receive this letter, this is not a voluntary mistake. This is involuntary mistake that you forgot to report your income. That the IRS is giving you a chance not to say that you didn't receive this letter because they received it. I mean, the 1099, the income. This is a chance. They give you a chance to pay the debt, amicable, without first notice, second notice, or any intent to seize your asset or right over here, nothing. You just at that point, you need to write a check and pay the money, pay the tax to the IRS, or an installment agreement if you're not able to pay in one shot the amount of the debt.
Understood. And here we have the final letter, letter 1153 and form 2751, proposed assessment of the trust fund recovery penalty.
Letter 1153 and form 2751. This is for payroll taxes, and we have spoken about this in other videos. Whenever there are payroll taxes owed to the IRS, the company is never off the hook. There is no installment agreement. There is no forgiveness. There is no any kind of reduction of penalties or interest or anything. You are supposed, because that money is not of the company. This is the deal. Whenever a company has employees, the company is obligated to withhold three taxes, or three types of taxes: federal income tax, Social Security, and Medicare. Those are the three types of taxes that the IRS is supposed to receive. Many times, companies pay payroll checks and they withhold those taxes. They keep those taxes and they pay at the end of the year. Problem with that is when the companies are short of cash, instead of paying that at the end of the month, the companies will use that money, believing that things will be better in the future months, and they will, at that point, they will pay whatever they owe. Wrong, incorrect, mistake, terrible mistake. Even before paying to the credit card, even before paying to the bank, you are supposed to pay that to the IRS because it's the government. They can trace you, and this will take you to jail. This kind of letter 1153, proposed assessment of the trust recovery penalty, This trust recovery fund is a trust established to recover the money from the taxes that were withheld by companies and were not paid to the IRS. This is the reason of this trust fund recovery. Letter 1153 is the intention of the IRS to recover the money that the employers are supposed to pay to the IRS. So this is taxes. Taxes from the employee, income tax, Social Security, and Medicare, and the portion that the employer is also supposed to pay. So whenever the employer doesn't submit these monies to the IRS, it's a felony. It's a criminal case because this money is not of the company. If there is a taxpayer who cannot pay their debt, and that money is personal, I mean that is personal, it's nothing. That will not create jail because that money is a taxpayer. The taxpayer and the IRS are the two people participating and disputing the debt. In the case of a proposed assessment of trust recovery, letter 1153, this is payroll taxes, federal income tax, Social Security, and income tax and Medicare taxes that were not paid to the government. But that money is not from the company. That money is from the employees. That money was withheld, was taken away, was retained from the employees. The company withheld that money, retained that money, and didn't submit that money to the IRS. So the company has misappropriated funds from a third party. And because that happened, the IRS is that is a felony. The IRS is bringing criminal charges against the responsible people. Usually is the president and the CFO, or the president and the controller, or the president, whoever is responsible for the payroll, because that person who was doing the payroll was supposed to submit the amounts, submit the monies to the company. If the person who is just processing the payroll doesn't have any signature in the bank account, that person is off the hook. It's whoever has a signature in the bank account and was not able and didn't submit the money to the IRS. At that point, if that happens, if the person is in the USA and if there is no arrangement, maybe a liquidation of assets for the company, maybe sale of some part of the business to recover the money, the next the IRS will bring criminal charges with the individual. At that point, there will be no renewal of passport, obviously. If the person escapes to another country, he will not ever be able to enter the US. The moment that he or she enters the US, there will be a marshal waiting for the person in immigration, because immigration will have the reward notice that the person is targeted, or is a target of an investigation, and at that point it will be removed. The immigration officer will transfer the person to the authorities, to the marshals in the airport, and it will be delivered to jail. So this is the worst of the worst. How do you prevent from doing this? If you have to pay your payroll taxes at the end of the month, borrow money from the bank, because the bank cannot take you to jail. So you always do whatever is riskier. You always cure the risk. The riskier activity first. What is the riskiest payment? Is the riskiest activity is not doing your tax payments, especially if they're payroll tax. Because if it's personal, the worst thing that can happen to you is a lien in your house, garnishment in your property, and kidnapping your bank accounts. But if this is money from payroll, the worst can happen to you is going to prison. So be very careful whenever you are dealing with third party money, and if you need to borrow money from the bank, like open a line of credit or whatever, do it, because that's with the bank. Even if they are personal or business, they cannot take you to jail. The IRS, when you do not pay payroll taxes, can. So be very careful.
Got it. Thank you. Well,
And if you are in this situation, talk to a professional. Do not deal this by yourself because the IRS will crucify you. They will ask all kind of questions that you will be forced to answer. And a fraud will be also might be also discovered. If the IRS question your accountant like those all kind of questions to accountant, your accountant doesn't know, will not be able to answer, and it will be able not to lie, will be able to say the truth. I have no idea. So be very careful at this point. You are in hot water that you need professional help. So do it. Look for professional help before addressing any letter or doing anything. And pay first to the IRS, even if you need to borrow money from the bank or to somebody else, like pay that first. Be broke with anybody else if you have a business, but not with the IRS.
Perfect. That is extremely clear. Thank you very much, Fulton, for the advices. And thank you, everybody, for watching us. We hope this information divided into 3 videos will help you in the future. And of course, if you have more doubts or any special case, please do not hesitate to contact us by sending us an email or write it down in the comments. You have our email address here, so please, we are here for you. And also remember that on Facebook, we have an exclusive group where we talk about taxes, of course, and you are more than welcome to join us. You have the link of that group in the description of this video as well. And of course, remember to subscribe to our channel so you can be notified when we publish new videos about taxes. And if you want to know more about the topics we have talked about, we invite you to watch our webinars about offering compromise, letters from the IRS, and installment agreement. Thank you very much again. Thank you, Fulton, for all this information and advices and everything and tools. Well, see you everybody soon in the next video. Bye-bye.